everybody, it's me, Myra, at Down Home Money, a simple approach to financial freedom. I hope you're doing well. It's Tuesday and it's my day, and today I'm going to share with you the 5 stocks that paid me the most in dividends in 2021. I can't wait to share this with you. I'm going to share with you how many shares, what they paid, and what I've got invested. You don't want to miss this. All right, are you ready? Okay, so as you know, let me go over a little bit in case you're new to our channel, and be sure and subscribe. I do real estate. So I've been in the real estate business for over 30 years, and I actually retired the first time from buying rental property, and I was able to retire at the age of 33, and I had bought 10 rental properties that were throwing me off $5,000 a month. I was a hairstylist, my husband was a policeman, and we both were able to quit our jobs in our early 30s, and we traveled, had a blast, and then I got bored. So I got my real estate license and started selling real estate, and the rest is history. I now own a franchise in Northern Kentucky, a real estate franchise, and I have a real estate team here in Texas. And during COVID, I was home a lot, and I just needed something to do. I was bored, and I like to make money. So I was watching all these YouTube videos of people building dividend portfolios. So I jumped on board and decided I was going to build a dividend portfolio. I'm a novice, and I wanted to learn. So I started studying. And you guys, in 2 years' time, because next month, I started my YouTube channel in February of 2020. So next month will be 2 years that I've been doing all this. And it's been an amazing journey and exciting. I had some real estate because, again, I do real estate. I had invested in real estate over long years, 30 years. I sold a property that I had paid $360-something thousand. I'll put the video up here. I sold it for over $895,000, and I took my profits and I built me a dividend portfolio. So yes, I had money to get started, but I promise you, you just have to get started. Because on another note, years ago in my 20s, I started a SEP, a simplified employer pension. Every single month, I put money in it, didn't look at it, didn't touch it. I put it in the Vanguard S&P 500, VFIAX, and just let it ride and compound. And you guys, within 10 years, it was worth about $160,000. On the next 10 years, so a 20-year total, it was over $1 million from doing monthly contributions and never touching it. So I understand compounding, and I don't want you to get frustrated if you don't have money to just throw money in the market. You've got to get started, and that's what this is about. I've done it both ways now, and I'm going to tell you that you just have to get started. You need to open a brokerage account and do it whatever's your way. This is about you. It's your journey. Don't compare yourself with other people. And I'm probably older than you are, and so that's why I am in the position I'm in. So if you're in your 20s and 30s, I would just share with you, you've got to get started and you've got to make a monthly commitment. So decide today that you are going to put so much money every month. And I would tell you, if you're new and you're just starting, do it in ETFs. That way, that's exchange traded funds, and that way you're getting the variety of the stock market, not just because when you buy one stock, it's riskier because you could lose your money. But when you're buying like ETFs, you're buying a whole basket full of stocks, and the chances that Apple's up one day and Tesla may be down, or Microsoft, they're all in one, and you're getting all of that. So it's just important you understand that. So it's like buying a little bit of all these companies. And you just need to get started. So I can't stress that enough to you, because I've had a couple of people reach out and they go, well, you had money. You know what? Quit using the excuses. That is an excuse. Trust me, when I started my real estate portfolio, I didn't have any money. I was doing haircuts. But when I decided I was going to do it, get out of the way. And that's the kind of mentality you have to have. You can no longer be a victim or say, well, it can't happen to me. I got a high school education. Don't tell me about I don't have the education. Me either. I have a high school education. I just cannot stress enough to you that anyone can do this. You got to have a will. And if there's a will, there's a way. And I hope that I can be that person that you can reach out to, downhomemoney@gmail. I'm here to help. I want to see you get everything out of life you want. We've got to all stop being victims. We've got to quit blaming other people. And we got to quit comparing ourselves. We have got to take the bull by the horns and do this. Don't wait any longer. It is January 2022. In January of 2023, I want to hear from you telling me thank you for pushing me, because that's what this is about. Today, I'm pushing you. So I'm going to give you my top 5. So are you ready? Because here they are. The top 5 stocks that I made my highest dividends on, and I'm going to share with you what I made, was AT&T, EPD, ORI, DIV, and Exxon, XOM. Now, I want to share with you what happened for me in each one of these. And we're going to start with AT&T. So for AT&T, I made $11,691.54. I have 10,000 shares. And it has a yield of 7.91%. On AT&T, it pays 52 cents a share. You cannot beat that, you guys. 52 cents a share. Yes, I did a video, and I'll link it up here, that they probably are going to reduce the dividend, but it doesn't matter. You got to get started, remember? And if it goes in half, it's still it's a 4%. So I think AT&T is a great buy right now. It's selling in the, let's see, I've got it right here, $26. It closed at $26.29. So it's in the low $26 range. Buy you some AT&T. Okay? I made $11,000 on it. Next up, EPD. It's number 2 for me. I have 6,400 shares. 2 years ago, I had 0. I buy every week. I buy monthly, weekly. I'm buying shares. I am cost averaging at all times. I made $7,245.83 on EPD, and that is a 7.69% yield. That's pretty doggone good. All right, next up, ORI. Old Republics, one of my favorites because they pay special dividends. Yeah, I got 2 special dividends in 2021. I have 1,901 shares of Old Republic. It's a yield of 3.45, and I made $4,543.11 on ORI for the year. These are my totals for the year. So next up, DIV. Y'all know I love this one. It's an ETF. It is paying a monthly dividend, and right now it's 10 cents a share. So if you buy 100 shares, you're going to get 10 cents a share, $10 every month. That's how you get started. And it sells, let's see, what does it sell for? Around $21 right now, 21 in the low $21 range. So get you some DIV. So it is a super dividend fund, mid cap. It has got some great stuff. You guys go look it up and be sure and get started with DIV. It's one of my favorites. I'm 4,550 shares, and those 4,550 made me $3,571.82 for the year. And it is a yield of 4.59%. So this is one of my very favorites, and I think you're going to want to get you some of it. So let's talk about number 5. Number 5, ExxonMobil. So Exxon is paying a 5.11% yield if you get in now. I got in, you guys, really early on when Exxon dropped like crazy. in the early 20s in 2020 when COVID hit. And so I am actually up on this stock $29,302.38, and it paid me $3,282.41 last year in quarterly dividends. Four of these are quarterly, except DIV is a monthly dividend. The rest are quarterly. So the top 5, I'll share with you what they paid me last year and how much I have invested. For the year, I made $30,000 on my top 5. Remember, I have over 50 in my portfolio. I think I'm at 52 now. I'm bobbing and weaving all the time. So those 5 I am keeping and am investing heavy in. So $30,334.71 is what I made on the top 5. I have $575,174 invested, 96 cents looks like. That's what I have invested in this. In those 5. And again, remember, I sold that apartment building, or 5 units it was, and I made the $500,000. So I was able, but I've been doing it. I've been cost averaging as I go, just to give you an idea. I am down on AT&T based on what I've invested. I'm down $10,546.48 is what I am down right now based on my investment and the value. But I have made, as you can see, $11,691 in dividends. And I'm getting ready to get my 10,000 shares on February 1st when they pay their dividend, which is 52 cents a share, means I'm going to get $5,200. I'm now taking cash dividends on AT&T. I don't want to get any more heavy weighted on AT&T unless it drops, and then I start buying again. I am up on EPD. I'm up $9,541. On number 3, it was ORI, Old Republic. I am up $78.50 on it. Number 4 was DIV. I'm up $13,137 from when I invested, from based on what I have invested and what it's now worth. And then number 5 was ExxonMobil. I am up $29,302 for a grand total of the 5 stocks that I'm investing in. I am up $49,285.25. So I made $30,334.71 for my dividends for the year. And at the end of the year, I was up year over year $49,285.25. So I think that's pretty doggone good. One out of the 5 have actually lost some money or down based on what I paid. And that's okay because AT&T pays a really good dividend. And like I said, I will be caught back up. But I've made more money in dividends on AT&T this last year than what it's valued at. So I've lost $10,546 on what it's valued at current date based on what I paid, because I've been buying it. I was buying it when it was 28. I was buying it when it was 29. I was buying it when it was 30. It dropped all the way down to $22 a share, and then I started really buying again, and then now it's back up to over 26. So I'm catching up. At one point, you guys, I was down 50,000. But I did not panic. I have learned you do not panic. I didn't panic. I was like a little nervous, but I just kept buying because I believe in the company. And I think with the merger with Warner Media, I think that, and gosh, I think that's going to be really big. And so I'm excited about that, and Discovery. So I think that Warner Media and Discovery merger could be amazing. And of course, as an AT&T stockholder, you're going to get shares of the new company. So I think that's going to be a win. And I'm looking forward to that. So I wanted to just share this with you. I wanted you to see what I'm doing, see what I've invested, and see why you need to get started, because I think it is crucial to get started. I want to thank you guys for helping me. I mean, y'all send me some great messages. You tell me about great stocks to check out. I am counting on you to help me just as much as you may be counting on me to help you. And I'm very grateful for you. And thank you for subscribing. And thanks for watching my videos and commenting. It's going to be a great year, and I want to help you reach your goals. So whether we're talking about real estate, money, or life, Here at Down Home Money, we've got it all. And I just want to hope that I bring you value every week on Tuesdays. You know, that's when my video is. Don't forget, you can get my book, Down Home Money, on Amazon. A great read. It's the first of the year. If you're setting your goals for financial freedom, go get my book. It's an easy read. If you're okay with a Southern accent, I read it on Audible, so you can also get it on Audible. If not, I'd get the paperback. All right, guys, we'll see you next Tuesday. See ya.